All right. What's good, squad? This is Game Plan Sunday for April 7, 2019. As y'all know, we already do every week. We actually take a look back at what happened over the past week, and then we take a preview into what's coming this week. We take that information, we strategize a game plan on how to make some money in the stock market this week. That's pretty much what it is. So all the veteran traders, all you guys, all the veteran members, you already know what time it is. But for you new people, just get in the habit of this is what this is how we do. So at the end of the session, I'll take a couple of things from you guys for about 5 minutes or so, and then we'll wrap up the session. So try to take no more than 30 minutes to an hour of your time to get this through. All right. So we'll take a look back at over the past week, what occurred over last week. The markets was pretty choppy for the week. As you know, we're coming off of the week prior where we had the yield curve inversion. And so that was trampling the news. It dampened the markets a little bit. And it seemed as if it's been self-correcting itself a little bit here. And so we end up getting a nice rally into from last week. So it was pretty choppy, but for the most part, we were up. And that's mostly driven by the NASDAQ. So the NASDAQ actually rose, I think, over 2%. And it was actually a pretty healthy push up. So we actually extended to new levels. And in the NASDAQ composite, we have a lot of tech stocks. When you think about NASDAQ, just think about technology, tech stocks. NASDAQ, tech, just think about that. And so leading that, we had the chip stocks, the semiconductors, the chip stocks. All those companies were actually booming, making a lot of money. And if you guys remember from the previous weeks where we did the article we did the article for 5G, there was a pretty nice list that was on that article. Let me see if I can actually pull it over here so you guys can see it. All right, cool. All right, so if you guys can see that, let me know. All right, cool. So as you guys can see from the website, we had a pretty cool article, which was the, let me just get rid of that real quick. Oh, all right. So, and if you guys don't know, already know Wall Street Jap Boys, this is the website. This is where you get our training at. As you can see here, you just click the button there and you can register to become a premium member. And you get all the goodies there, but we're just going to go to the blog site. So if you're not a premium member, you can always go to the blog site, catch the latest articles, whatever we're writing about. I'm normally trying to get you guys some really good wisdom, and this stuff should serve you for time to come. But we had a article for last month that was the 5G article. So some of you guys are probably just starting to see everybody else catching on to it. And we already did that. And so anyhow, if you go in here, there's a pretty cool, actually, let me just go into it. There's a pretty cool watch list that's in there. So give you the watch list for free. It's in there. You just put it in there, keep it on your horizon. Take a look at those stocks when the markets start to do what it does. And so these particular stocks here, because of the 5G boom, let me just scroll all the way down real quick. All right. And you can just actually put these in your scanner. All right. Members, y'all already had the scanner. So anyhow, all these tickers are stocks, that are taken off of 5G. And the funny thing is that Verizon actually just went ahead and launched their 5G. I think in Chicago and Minneapolis. It's limited, but I don't know why they just kind of did it just to get it out there. But it's interesting because it's a race to securing 5G. So just anyhow, just remember, go stop by the website and get that article, check it out, get the information. But China, they're rolling out their stuff, and then we have Verizon that actually launched theirs, was actually getting ready to launch theirs here. So just keep your eyes out on all news in regards to 5G. All right, cool. So because of that, again, remember we talk about the tech stocks. And all these tickers over here, I'll just pull them up on my scanner real quick. 5G list. You see all that green, all these stocks were booming last week. So even though the markets was pretty choppy for the most part through the week, this list was booming. You see all that red, all that green. Look at this one here, like all that green and just a little bit of red. Okay. And that's pretty much what happened last week, you know? So that's pretty much what happened last week. These tech stocks, they boom, okay? And so you're already seeing the race towards that. And let me actually get us to the, I'm gonna take us to the NASDAQ real quick. Just so we can take a look at. All right, so I'll put you guys some different charts up today, but that's only because I want to show you something here. We just remove this real quick. Okay. All right, so take a look at this here. All right, this is the NASDAQ. This is what, you know, popped the markets up last week. Okay. And what I have here on the chart, as you see, this is where we are right now. All right. This is where we are right now. 76.10. All right. 76.10 is where we are. Now, what's interesting is that we have the standard deviation. You guys know what the standard deviation is. All right. So I'm going to show you. That's this green dotted lines here that I have on the chart. Okay, it's just already plotted for us here. All right, see that green dotted line? That's just showing you where this stock should be trading in its normal distribution. Okay, so we should be trading within here normally. All right, normally this is where we trade at. Okay. This level here, this is from last year. So that's an indicator I just got in there, a level, you know, also eyeing at the bottom here. And we was actually checking to see if we could breach it. So it's still there. I can remove it, but that's not right now. The main thing is that you just want to pay attention to the standard deviation. This is where the stock typically moves. Okay. Now, once it actually goes over and beyond or underneath this level, it normally comes back. All right, now this is just on the daily chart, okay? So just, you know, see how it flows, okay? So it should be trading in this range. This is your standard deviation. But as we see back here, we went outside. We went out of bounds. It's like going out of bounds, okay? And this is back in September last year. And you see when it went out of bounds, it got pushed back down, all right? Price is way too high. Asset price is way too high. You need to cut them. Okay. Then as we see here, this is a big one right here. Out of bounds down here. Just pay attention. Every time it comes out of bounds, it has to snap back into its range. Okay. Snap back into its range. Even here from last month, it peaked above. It got the snap back. It found this floor and now it's coming back. It's pushing for new levels, okay? It's pushing for new highs. All right. And just keep in mind that it's overbought, okay? It's overbought. Asset price is too high. It's really too high, really, okay? And how we know that? Because we know where it normally should be trading. We understand this range, all right? But we're outside of that range. So just keep that in mind going forward into into this week, that we are, we're out of our typical range that we should be trading in. And that's the normal distribution. Okay. Now I have reason to believe that the market wants to take us here. Okay. To this level here. And that's for my Fibonacci extension. But just keep in mind, we got 7,800 is going to be the number to watch, though. The market likes whole numbers. And so 78.55 is super aggressive, but 7,800 is going to be where the market is trying to go. And this is just in the NASDAQ. I'll pull up the other ones. But if you see, the last high was 77.28. Wasn't quite 7,800. This time, the market is going to try to push to that 7,800 and try to hit that new level before the next sell-off. All right. Okie dokie. Now, other things that impacted the markets from last week was the job reports, which came out pretty strong. Jobs that were added to the market for last month, they came out and they beat all expectations. So, it's kind of interesting because, again, you guys see we have indicators like the yield curve, and we know what the Feds do. If y'all was in the class, then, if you were not in the class, if you're a premium member, make sure you go back and watch that class so that you can really understand what's going on. It's a lot of things is happening with the markets, okay? And so basically, with the yield curve inverted, then you get the plunge protection team that comes in and try to clear it all out. You get all your analysts saying, oh, it's just not a big deal, blah, blah, blah. And as y'all know from the class, we see every time this happens, there's a recession that follows, okay? And it's just like clockwork, okay? But things are different now, right? Well, that's what the narrative is supposed to be. So that makes things interesting because you get things like job reports, employment numbers that says that, hey, the economy is jumping out the gym. More jobs are being added. So more jobs are being added. And then they're also saying that inflation is not an issue. So inflation is not an issue. Jobs is not an issue. And they want the Feds to go ahead and drop them rates. Okay, Feds go ahead and drop them rates to avoid this recession. But don't know if they can do anything about it at this point. They're trying, so we're seeing it. So you're seeing some of the manipulation. That's all I can say. That's just my personal opinion. Okay. Now, this is the S&P 500. This is the market. Now, we tend to try to trade, follow the path of least resistance. Okay. That means that whatever is the least resistance, that's what we're going to take. And so just looking at here, you see the trend that we got is, we're still up. And so the typical direction, we're going to follow the trend. We're going up. But just understand that we have resistance here at that level, 2950. And this is the previous high. Now the market wants to take that level out. It wants to test. They're going to try to push up the assets to get there. Okay. And so I have reason to believe that we may hit that level this week. Okay. So I'm still looking to the north, but we have to keep in mind also the bond market, which we'll actually take a look at that as well. So the bonds are going to let us know. So we also got to keep that in mind. And we'll take a look at gold as well. But because I'm looking at the S&P 500 and the market likes hitting these whole numbers, we're actually looking at that 2950 as the next zone. The market just want to hit that bell. They want to ring for them new highs, show you that, all of this sell off, all that panic sell off wasn't nothing. The economy is super strong. We come back, snap back like it wasn't nothing. You see what I'm saying? And then come back right here. Okay. And then they tell you, okay, well, that's why you're supposed to just stay in the markets. Because if you stayed in, you wouldn't have lost nothing. You'll be right back to where we had left you off at back in September. Okay. So just keep that in mind. All right. And let's take a look at the bond market. All right. Okay, so this is another interesting situation, okay? And again, you guys can clearly see our standard deviations, okay? This is the bond market. It should be, trading within this zone, okay? As you see, anytime we get outside that zone, okay, it's oversold. That means it's too much selling. Same thing here. So that makes it snap back. Then it gets to the normal distribution, normal zone. This is where it should be trading within this range. Now, the yield curve inversion thing, you see the prices went up that high, out of bounds, got corrected. Now it's back here, but it hasn't hit in the center zone yet. It looks as if it's trying to catch a floor here at the top before it makes its next levels higher. So this is a possibility. Now it could breach down low. which would be good for the stock market. If that goes down below, then the stock market is going to rally and is going to hit the numbers that I just told you. So that's what it's going to go to if the bond market sell off. But if the bond markets don't sell off and the bonds start to actually just take this as a floor and then make its next leg up, then you're going to see the stock markets go down. Okay. So this is the things that we're going to be paying attention to this week, the development in bonds. We're going to be paying close attention to that. And then also, let's take a look at the gold market. All right. So gold, this is the gold market here. And this is an interesting situation. Same thing that I just told you all to look at. This is standard deviation here. Okay. As long as gold is trading within its range, then that's the normal distribution, which is, it's good. So this is normal risk right here that we take. Okay. But what I am seeing here is that, and I posted this in the group this week, if you guys are seeing that gold is trying to form its bottom. And it looks like a pattern is forming on gold. Now, this is interesting for you traders out there that know your patterns. I know we have Topaz, Ron, Terry may know some things. Me and Mark, you guys know your patterns. We got an interesting situation that looks like it's forming. Anybody see a pattern? If you're not on the live chat, you can't see it over here. But anyhow, I'll just show you this right here. Looks like a double bottom setup. Okay. So, and again, if you guys, let me see, all you members, you're supposed to have these things. And if you don't, I want you to let me know so I can get them to you. All right. And I'm going to show you this. And this is the reason why. You guys got your game plan. Okay. That's your trading strategy. Show you how to navigate. You got this book here. This book that I made is called A Pattern Perfect. It's a book that I made here for you guys called Pattern Perfect. And then we also have the option strategy guide where you guys can see that. And you get all this as members. And then you got your Greeks. Anybody asking questions about Greeks, there you have it. You have a book. You should have these things. If you don't have these things, let me know in the comments and email, and we'll make sure that we actually get it to you directly. I'll show you guys from the Pattern Perfect book. As you see, it's pretty cool. All right, so we have some patterns here. I'll just show you this 1 second because this is what helps you. Okay, you keep this on standby on your trading desk or wherever you are. Okay, and you can see this is a pattern. Okay, all right, I give you the whole blueprint, and it's called a double bottom. All right, so anyhow, this is the Pattern Perfect book. So let me know if you don't have it so you can get it. Anyhow, this is the setup, the pattern that I just showed you. This is what we're actually looking at. Okay. And the double bottom just basically looks like a W. Okay. It's a pattern that's forming. You hit this bottom here and it looked like it's going up. Now, the double bottom is a bullish pattern. So this is going to be interesting if we see it come back up. And we need to see it come up to these levels here for the pattern to hold. Patterns don't always come through as you expect. Sometimes they fail. Sometimes they form into other patterns. But this is what you want to typically see. So you eye this and you say, okay, well, it's starting to edge up for tomorrow, Tuesday, Wednesday, whatever it starts to go up. Then you know that you have a bullish setup, and it's called the double bottom. And it should come up like this. That's what the expectation is supposed to be. All right. Now, gold is also in a little squeeze here, and it's in a bearish squeeze. So just, again, we're just going to be watching, see how it behaves at this floor. Okay, we want to see that hold. You definitely want to see this level, this Fibonacci level hold, okay? Because it could come back down. It may take its shape here later. The market likes to fake people out, shake out easy money all the time. So anyhow, again, we want to watch the development. If we see it come up, then we want to set our eyes to the north. Okay. Now that's interesting because if that goes north, then that means the market is going south. So you got two different situations depending on how everything, develops. Okay. We got one setup where the market is trying to pose and hit this new high. We have other setup where the market is already overextended and the markets have had enough, and then they get to profit taking. Okay. go ahead and start taking profits. The institutions start to take their profits, and then the market goes down. So that's what you typically would see. So just keep that in mind. Gold is something that we're going to keep our eyes on as well. So bonds, gold, and you got your equities. Okay, S&P 500. All right. And so what's interesting coming into this week, we have earnings kickoff. So earnings will be kicking off on Friday with the financials. So we start off with the banks. We have, I can't remember which ones, but we have the banks that start, and I believe it's maybe Goldman Sachs. Somebody help me out. Anyway, I'll get it out to you in the writing. But I do know that we had the banks coming up on Friday. JP Morgan and Wells Fargo. That's what it is. So JP Morgan and Wells Fargo earnings on Friday. And so we're entering into earnings season. So that, again, we're looking at earnings season. Now that's going to be interesting, earnings season, because depending on how these companies perform, it's actually going to actually impact the market, which could also move the hands of the Fed into certain directions where, again, the bond market is already pricing in interest rate cut coming at the end of the year. But, if the markets, are not, the markets are getting too hot. They hit these new highs and they get too hot. The Feds might put that interest rate cut back on. Okay. So that's interesting. So we'll see how these developments go. They always got to change the narrative. You got to stay on your toes and just understand the risk that you have here. So what else do we have here? All right, let me pull up the Wall Street Jap Boys scanner. Since we're looking north, we're going to go on to. All right. Yeah. Thank you, Topaz. Thank you. JP Morgan, PNC, and Wells Fargo. Yeah. So the banks are going to be kicking off. And as you guys know, I have not fared well with the financials, so I'm not trading the financials, but you guys are more than welcome to. Financials have been very interesting here. But this is what I have my eyes set up on. Let me actually pull up the oil markets. See, the oil prices are going beyond their, they're extended here. Pierced through, came back down. It's making its way to new highs as it looks. But again, we want to try to catch it in this. It's got to come to its, normal distribution. So just keep that in mind. But because they're going to new highs, let me switch the charts over. Right. So we got oil markets through these ceilings here. All right. We had the 200 moving average that it pierced through. And then we had our Fibonacci extension, the 1618 that it pierced through. Okay, so now you can see it. This thing is moving. It's a little laggy here. I don't know why. All right, cool. Now we see those levels with key levels of resistance. Okay. The markets gave everybody a relief for the holidays. They didn't want inflation to hurt you so bad. They want you to spend money for the holidays. So you got to spend your money for, again, you see the time frame, from Halloween all the way out to Christmas. All right. So we end up seeing, because again, inflation moves with freaking the gas rates. Cost you more at the pump, it hurts you. They made sure everybody got a nice relief for the holiday season. Therefore, you can spend more money because your money is worth more. All right. So you spend all your money for the holidays. Then we get to the new season this year. Now they say, oh, holiday season over. Let's go take them back to the cleaners. So this is your gas rates going up. And again, it's squeezed through this ceiling here. And now it looks like it's on its way to hit new highs. Now it is extended. It is extended. And you have political tensions around there. And We'll see how they do it, but just keep in mind that's extended. But the reason I wanted to show you the oil is because I do see setup here. That I'm gonna be iron here. We got more space to the side. All right. Let me know if you guys can still see the charts. Everything is good. It's looking really laggy on my side. Okay. All right, so we'll go with this one here. So we do have ceilings up top. We have a 200 moving average crossing with the Fibonacci 618. That's, you know, a key level of resistance. We see them stack on top of each other. And now, again, the trend is to the north. So we're looking north. And we know where our ceiling is at. So we actually want to eye that. And the momentum, we have a nice squeeze here. And we have the trend going up. We have buy triggers here, momentum going up as well. So again, we're just taking a look at these signals. This is one signal, two signals, three signals, four signals. And then on the charts itself, you could just say that this is a 5 signal. So then you say, okay, well, this is giving me my confidence that, okay, this is going to go north. And it should go here. So I want to get in and I want to get out at that level. Yep. All right. So, and this is the sector itself. And so, all right, cool. All right. So the sector itself, this is the big basket, but we actually want to take a look at some names in here. Like Dustin says, Exxon. He's like Exxon and, yeah, Exxon in here. This is an interesting one because this is a setup that's a squeeze within a squeeze. All right. So looking at a squeeze, I do like this setup to the north side. Again, we have all these confirmations here that boost our confidence in what we're going to do. Okay. We do have this resistance up ahead. We actually want to see a pierce through, and we want to ride it up to our first target. Make sure you take profits when you get to this target and don't get greedy, because then you might lose all your money when they sell out. Okay. But if you're trading big lots, just shave some off at that first level, keep a few on the back end side and take it to the next level if it goes even higher. Now, I don't see it going that high, but it might. We do have earnings coming up ahead, so just keep that in mind. All right. What else? So that is one. CV Chevron is another name that's in the basket. That's right, Topaz. Tip on out. We got to tip on out with the bag. All right. We want to realize our gains. They look good when they're on the charts. You're like, hey, I made some money, but you got to take it out to actually make the money or you lose it. Okay. So this is another one here that we got. Again, we're just looking at our indicators here. Boom. We got a squeeze there. Boom. We got an up trigger here. Boom. There's another up trigger that's here. All right. And we say, boom. Well, we got a target up ahead. Okay. And all right. And Ron also wants to look at MPC Marathon. I won't have a squeeze on this. It's been a while since I did this one. Let me see. We don't have a squeeze here, but that doesn't mean it's not poised to make some noise. All right. You got to keep in mind that 100 moving average is right ahead. So again, it's really not much movement in here, but if that sector moves and this is in that sector, then they may be able to push it up to these new levels, which you can kind of eye that 200 moving average there. Okay. But just keep in mind, it's got to hit this first hurdle, which is the 100 moving average, which is also the 618 on the Fibonacci. And so you got to see if it's going to push through that. So for that reason, I do like energy sector for the long side this week. We'll see how it plays out in the markets. Lyft, yeah, I think leave Lyft alone right now. We'll talk about that later. You see Topaz, she said, aha, you better listen to Topaz. She got lots of wisdom. All right, what else on the table? So also, I think I want some Chinese exposure, which I can see on all JetBoy squeeze list. And again, you guys all got this. All your members, y'all got the Wall Street JetBoy squeeze scan. You can just load this up, and it's gonna pull over all these things. These are things that I look at. Okay, all those names. Okay, these are all in squeezes, and the squeeze mean that they're compressed, and they got to bust out and make a move. They're either gonna go north, or they're gonna go south, but either way, they got to make a move. And it's normally an explosive move, which you need them explosive move so you can make some money. All right. See, that's all you needed to hear. That's right. So anyhow, you can just take a pick from this list here, which is pretty decent. It's pretty good list. And you can do your homework with this, okay? Do your homework, okay? Meaning that you can just check these stocks out. All right, they pull up in the scanner for the criteria that we're looking for. And Alibaba, again, this is on my radar, and I do like Alibaba to the long side. And it's because I see some setups. So for one, I do have my 9 and my moving averages are pretty much stacked. So we got the 9 moving average, and we got the 20, and then we got the 50 here. We got the 100 here, and then we got the 200 here. All right, so when these lines stack up in this order, that is a confirmed bull trend. I mean, that stock is moving bullish. All right, so you can easily just take a look at that. It's like, oh, that looks good. That's all the stars in alignment. Yeah, that's good. Okay, blah, blah, blah. Also, again, just like everything else, we got a buy trigger here. We got some up momentum here. We got a squeeze, which is what we're looking for, so we can get some explosiveness out of it when it fires long. Our trend is telling us that this is moving up, okay? And we have our Fibonacci set up here in advance. That's letting us actually see what's up ahead. So resistance zones up ahead, okay? We got to make it through these levels, or try to make it through these levels, but that lets you know that's where you need to be getting out with your profit. As Topaz said, tip on out. As I say, run off on a plug. All right. Now, so another cool thing is, again, make sure y'all get your book. You ain't got your book. There's a lot of valuable information here. You just turn to page 1, and actually, if you turn to page 2, you see this nice little pattern here. All right. So again, this is a nice pattern, ascending triangle. And if you look at the chart, you have something that looks just like that, don't it? Bingo. Okay. So you have that set up. That's actually there. That's a pattern. So we have a pattern. And these are technical indicators. Patterns are behavior. That means that we see them once, you see them twice, you see them thrice. Okay. If it look like a duck, smell like a duck, quack like a duck, it's probably a duck. So that's the value that we get with these patterns. So anyhow, so you have all these confirmations here, which boosts your confidence. There's nothing special about me. I'm not like some magical guru who just spits out things. I'm showing you the process so that you learn how to use the stuff. You can do it on your own so that you can be independent, so you can make your own money. And then maybe you see some things that I don't see. Okay. All right. So again, we have that pattern. That's one. We got this one. That's another confirmation. All these technical confirmations that we're looking at. And this is a bullish setup. So when it goes through this little squeeze thing, it pops up. That's what it normally does. Okay. So because we know that setup, that's why we're actually eyeing that. Now, another thing is that Baba is a Chinese company. They're like the Chinese Amazon. Okay. We do have developments still going on with Trump and China, or US and China, I should say. But the market is pretty much just like, forget about it. You know, we've been talking about it all the beginning of this year. End of last year, y'all know, if you've been here, you've been seeing, we've been talking about China, so you probably China'd out, okay? And just like everybody else is, and then they keep telling you, oh, China's going good, China's going this, that, and the third. The deal with China is going boom, 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 boom. But ain't nothing really materialized yet. but they claiming something that should materialize within the next 4 weeks. And just so far, all the talks about China is pretty positive. Anyhow, any positive movements in China, I would like to get some exposure in that, so China was moving, I was going to move. Okay. So again, China moves, things are positive, things keep positive with China. In fact, they had some positive things. I think the manufacturing numbers were actually better than what was expected. Again, China's, their economy is slowing down, dragging everybody with them because everybody's in bed with China. But I guess they just released some data talking about their economy is not, I think it's actually making some improvements. We'll see how that works. But China is going good. Baba's going good because Baba, if you never shop there, I mean, geez, you see why all these manufacturers and companies that leave America and go to China. It's crazy. You can get everything you get at Walmart from Alibaba. Skip the middleman and go straight to the manufacturer. So this company, Baba, it's crazy. If you're going to start a business, you need to actually probably go there to get all your material probably. It's not an endorsement. I'm just saying, take a look. Anyhow, so I like Baba to the long side for some Chinese exposure. What else we got here? And all right, so Ron wants to look at Walmart. Look at Walmart. All right, Walmart's also on the list here. I like some bullish action here. What do we see here on Walmart? And I believe Ron called Walmart out last week. So this is something that we've been talking about in our group. It's got that squeeze. Okay, it's time for that squeeze to do something. That squeeze is a little extended. We see that the trend is starting to shift upwards. On the faster side of the stochastics is going upwards also. Got some up triggers here. And we have a pretty nice floor at this 100 moving average. That little blue line that you see there that I'm taking this arrow and hovering over. We see the stocks actually fell and hit that line and it held. And now it's bouncing off. So this could be a nice bounce play to the upside. Okay. And it's almost like a freaking descending triangle, I believe. But the triangle goes downward and it bounces up. That's also in your pattern book. And yes, Topaz, make sure we get you that. Make sure you get that book. Oh, excuse me. I said that. No, not a descending triangle. Falling wedge. Excuse me. This is almost like a falling wedge. Okay. Anyhow. And you may see that happen. So again, could be wrong on this pattern formation. Again, these patterns, these are, algorithms normally do these and they suck people in and then they drain your money out. So it's a little treacherous sometimes, but they do work pretty good. All right, what else we got? Okay, DOCU. Sign. All right. It's been a while since I played this one. All right. So, and this is a flag here. Flags normally move like that. Okay, so that's just the pattern that you got on that one. So the way they normally move. We do have a little buy trigger here. Got some momentum shifting. The trend isn't working here, so that's one less confident signal. But again, you don't have to have all of them to make it move. It just further your confirmation of where we're moving to. All right, so if this moves to the upside, oops, let me annotate here. It moves to the upside. You want to see how it behaves towards the 618. You get a breach through there. Then you're looking at that for your first target. 618 for your second target. That means, hey, you need to get out, take your profits and get out of there. All right. So ADP. Let's see. Yeah, this was up here. It's been a minute. Yeah, this is a little flag here too. The stock is clearly bullish. Remember our stacks, the 9, the 20, the 50, the 100, and the 200. It lets us know where we need to be looking at bullish. And this flag moves like that, comes up. There you go again. So, I mean, you typically see that kind of formation with this as well. Keep in mind, you got earnings coming up. Yeah, earnings coming up. Let's see how that goes. Looks like it's extended actually though. So just keep in mind, you got to shift the momentum, look like it's coming down. We do have a sell trigger here that says sell. All right. So what I would like to see what happens to this one here. See if it holds the 9 moving average. If it doesn't, it's okay if it comes back here to the 20. All right. See if it holds there. But if it breaches there, then, you know, you got to look to the south. All right. But again, you got this wiggle room here. It can hold here if it can hold a 20 because it's a little extended. So it might try to, you know, bring it back down some. But if it holds here, then and you start to see it consolidate, then we may get that next run and it probably running up into earnings. All right. So let's keep that in mind. All right. Anything else y'all want to look at? All right. Make sure that y'all subscribe if you haven't already subscribed. Also, make sure that you get the gear if you're a member. Represent, blah, blah. Represent. Get you some gear at the website. Check out the articles, the blogs, the articles. Pretty good. Get all the free material that you can get. And then for the rest of you members, make sure that you get your... Again, you got your trading plan, so you don't even need me. Got your trading plan. It's going to give you your setup, let you know step by step what you need to be doing so that you don't have to be like, Pierre, can I talk to you? Because Pierre has a lot going on and always can't be available. In fact, I don't think there's any other guru that is available. And I'm not a guru, but you can't talk to them, but you can talk to me. But make sure that you get, you know, all these things here. If you don't have them, let me know. I want you guys to be successful. That's why I took the time to actually craft all this stuff together. Okay. You get your books and you can keep them right there by your desk side. Okay. Keep them by your desk side. It's your blueprints. They let you know what you need to be doing, how to execute your trades and all of that. Okay. So if you don't have that, you know, reach out to me, leave your email or so. Let me know so that I can get it in your hands. We got more classes that's coming on the way. My schedule has been very, very, very busy, very booked. So I did all these things before I knew I was going to get into a compressed status. And yeah, Topaz, I'm going to be available sometime here in the near future. But I went and did all these things last year because I knew I was going to be in a compressed zone where I wasn't going to be able to do much. But we'll get back on. We're doing more live classes and stuff like that. But to keep you guys together, to make sure that you're in the know, you have all these great tools and resources that you need to know to be successful. And I truly would appreciate some feedback from you guys. Let me know how you feel about the material, courses, any ways that we can actually enhance what we do and you know, help you guys to be better traders, basically. And so as of right now, we're going to continue to go live on the Facebook side so that, you know, you guys out there can see how we really do this thing in the market. And we definitely would like to welcome you guys to join the team, join our community. Okay, you got a gang full of Wall Street Jack boys and girls out here that's actually doing this. And I hope that encourage you and let you know that you can actually do it also. So that's, you know, that's what it's all about. And as OG Rob always say, he says, each one teach one. So it's always, you know, it's not that I have all the answers or that I don't know it all. I don't know it all. I know enough. I know a lot, but I don't know it all. And so I like to have a community of traders, you know, that we all on the same level. And when I can't catch moves, you guys can catch the moves, you know, steel sharpens steel, you know what I mean? Iron sharpens iron. So that's what it's all about. Okay. All right. Now, with that being said, we'll go ahead and bring the session to the close. And I appreciate you. See y'all in the markets this week. Peace.